So, hello everyone, welcome back to Amuda Academy. So, in this video, we are going to learn about premium. So, in previous video, we have discussed about par. So, if we get premium in the question, so how to journalize these entries? So, let us learn this. So, let us read the question first. Jupiter Company issued 35,000 equity shares of rupees 10 each and at a premium of 2 payable. So, which means 10 plus 2. They are issuing at 12 rupees. They are issuing at 12 rupees. And on application, shareholders needs to pay 3 rupees and on allotment, they need to pay 5 rupees and which is including just a second, which is including 2 rupees of premium. So which includes 2 rupees of premium. Right. So here 2 rupees premium, which means 3 rupees is the allotment amount. Correct. So 3 plus 2 equals 5. Next, and remaining balance on first and final call. So here 3 rupees on application they have received, and again 3 rupees on allotment they have received out of 10 rupees, and remaining on first and final call. So remaining how much? 4 rupees. Did you understand this calculation? So on application they are receiving 3 and allotment they are receiving 3. Correct, because 2 rupees extra whichever it is there, that is premium. So out of 10 rupees 6 went and the remaining 4 rupees on first and final call. So we need to journalize this. So let us write the modern rules first. If asset increases we need to debit, if asset decreases we need to credit, right? So if liability increases, we need to credit, and the liability decreases, we need to debit. And if capital increases, credit. If capital decreases, we need to debit. Right. So this is the modern rule. So let us journalize these things. Right. Yeah. What is the first entry? What is the first entry? So I have already explained these things. If you want, you can watch the previous videos. The first entry is bank account debit. Why it is getting debited? Asset is increasing. For how much? For how much? 35,000 shares they have issued. On application, how much we need to receive? On application, we need to receive 3 per share. Right. So then 35,000 into 3. That is 1 lakh 5,000 we need to receive. So shall I write the column? Yes, that is much better. Yeah. Wait for a second. I'll draw the column. Then we'll move on. Yeah. So this side is debit and this side is credit. Yeah. We have received 1 lakh 5,000 on bank, that is debit. So then what will happen? To equity share application account. This is the entry. So again 1 lakh 5,000. The first entry, bank entry, is done. So then we need to transfer it to share capital account, whatever we have received. For that, we need to reverse this transaction. Equity share application account. In examination, you should write it completely, right? So how much? 1 lakh 5,000, right? So to where we will transfer? Where we will transfer? We will transfer to equity share capital account. Equity share capital account 1 lakh 5,000. The first entry is like similar to par only. The next entry will change because we are receiving premium also. Correct. We are receiving premium also of rupees 2 along with allotment. So let us see how we can journalize it. I'll extend the columns. Yeah, the first entry is over. Now, here you know the concept. Here we didn't know how much we will receive. So first entry will be bank. Now onwards, we will make due and then we will receive. So what is the due entry? So in previous video, I have already explained everything. Right. So equity, share, allotment account, debit. To equity, share, capital account. So this entry just name change. That's it. So how much? How much? So 35,000 into 3 on allotment plus 2. So totally how much it would be? It is 5 rupees, correct? 35,000 into 5 equals 1,75,000. 1,75,000. So out of this, how much we need to transfer to share capital account? So we need to transfer to share capital account only 3 rupees because that 2 rupees is gain on the price whatever they have mentioned, right? They are selling it for higher price, correct? So this doesn't include in the allotment, it is separate one. So it is other income. This income will be transferred to reserves. This income transferred to reserves, that is reserves and surplus. So reserves and surplus will be in liability side. Correct. Reserves and surplus will be in liability side. So this much you understood. The additional 2 rupees is a gain and which will be shown in reserves, that is reserves and surplus, and reserves and surplus will show in liability side. Right. So did you understand this? Yes. So now we need to transfer only 3 rupees to equity share capital accounts. That is 1,05,000 we need to transfer to share capital account. So remaining is security premium. Security premium. Correct. Security premium is liability because we will show it in reserves. Correct. So it is a liability, and a liability, if it increases, we need to show it in credit side. So here to equity share, sorry, security premium, not equity share, security premium, right? Security premium account, security premium account. How much we need to transfer? 2 rupees into 35,000. So it is 70,000. So 70,000 we need to show. To confirm, we can calculate like debit side should balance with credit side. Debit side should balance with credit side. So 1,75,000 on the debit side and 1,75,000 on credit side. So we did right thing. Yeah. So the next we made due entry. Next we need to receive it. Correct. So to receive, where we will receive? Bank account. Obviously, it is asset increasing. Bank account debit. So how much we need to receive? So we will receive 1,75,000 because 5 rupees we are totally receiving along with premium. Correct. Two, equity share allotment account. These and all, why credit, why debit. I have explained all the things in previous video. So you, if you didn't watch previous video, kindly watch it because you won't understand anything here. Correct? Without watching previous videos, we cannot understand why it is credited, why is it is debited. Right? So this allotment entry is done, finished. So after allotment, what we have? After allotment, we have first and final call. So which is 4 rupees, correct? 4 rupees per share we need to receive from the shareholders. So we will make it due, then we will receive. We will make it due, then we will receive. So what is the entry for that? What is the entry for that? So equity, share, first and final call account debit. 2. We will transfer it to share capital. Equity share capital account. You need to write equity share capital account. How much? So it is like 35,000 into 4. That is 1,40,000 we need to receive. We are making it due. We are making it due. So then we need to receive it, right? So we need to receive, where we will receive bank account debit and to equity share first and final call account. How much? 1,40,000. 1,40,000. So this is the end of this question. So kindly note it down. So if you have any questions, you can comment, and please follow my Instagram, which I will be showing in the screen. Yes, kindly note it down. These are very important. And note down the modern rules and question. So that's it. Thank you for watching. We'll meet in the next video. Don't forget to subscribe and comment. Thank you for watching.